Hey, welcome back. It's time for Chart of the Week, and I've got a VIX update for you. Today's Thursday, March 18th, 2021. Now, before we look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. First things first, I want to make sure everyone knows what the VIX is. I do have a video from exactly 1 year ago talking about this in more detail, but here's a quick overview for anyone new to the VIX. So this is the CBOE Volatility Index. And what volatility is a dispersion of returns, which therefore indicates how risky a market is or how the marketplace is in terms of risk. So the higher the volatility, the higher the VIX reading, the higher the risk of trading and the risk of the market turning lower. Now, this is actually calculated based on price inputs of the S&P 500 Futures Index options. But even though it's calculated from the S&P 500 futures, you can use it to guide your trading of any broad market or any individual stock or sector or other market. It's also known as the fear gauge or fear index. And it can be traded directly. You can trade the VIX using options and ETFs. Now let's go look at the daily chart because something really interesting is happening right now. All right, check it out. This is the daily chart of the VIX. That's ticker $VIX.X in TradeStation. Now, here we are today, March 18th, 2021, and look at where we were exactly a year ago. Crazy, right? Now, a year ago and one day, so on March 17th, 2020, I provided the tribe with a VIX update, and I had this key support here at 70.70. Let me write that in for you. Now, 70.70 was derived from important measure looking at the midpoint of a price range. And you can see that within 2 days, we closed back below that level. That was a massive clue to me that the run-up in the VIX was over and the markets might be calming down and the broad markets, S&P, Dow, NASDAQ, might start recovering. And they did. As the VIX fell, the broad market recovered higher. And we came into a more steady climb in the broad markets as the VIX started to have a more steady fall since last summer. Now, from a market timing point of view, I use the tools in my loss forecasting trading system to help me find forecasts. That's an exact meeting of time and price. And every little one of these X marks the spot that you see represents a forecast I had in the VIX that I shared with the tribe. And you can see that some of these were extremely helpful in precise timing, almost to the day, of expecting a key turn in the VIX, and some of them, like this one, were really close to the price target as well. The cool thing is that in the loss forecasting trading system, I teach you how to get the most out of your trade, not only when the forecast is hit on the nose, but also when it's missed. I mean, learning how to use a technical analysis tool when it's actually not working and still make money from it, that's pretty awesome. So the cool thing today, we are coming to key timing right now, today, with the expectations of the VIX to make a low. So remember, if the VIX makes a low, that means we're getting ready for the market to make a high. But I don't advise ever trading on the VIX alone or timing alone or momentum alone because price is king, right? So with the price action on the S&P 500, NASDAQ, and more still making their way higher, I wouldn't just come in and start selling the broad market just because the VIX is supposed to make a low today. We have to let the session finish. It's still morning here. But one thing to notice is that we didn't come down towards the price target, right? We're at the time, but we didn't come down towards the price. And the RSI power zones are already turning up from the bull support power zone. Studying momentum on the VIX, whether you're looking at the daily like we are here or weekly or monthly timeframes, is super helpful. And I actually have a full breakdown of the momentum action on the VIX daily chart as a quick case study in the 4 Zones RSI coverage system right now. So if you're a 4 Zones member, be sure to go check that out. If you're not a 4 Zones member, keep an eye on your email because I'm doing a live update of the course next week, something I only do every few years. So you're going to want to get in on that and be able to learn from me live about how to master momentum. So what do we do with the VIX with where it is versus the key timing? We have expectations for it to make a low, but zooming in to the actual recent bar highs and lows, you can see that we're still making a pattern of daily lower highs on the VIX. Price is king, price action, I should say, is king. And so the candlestick itself hasn't had a break, so we don't have a reason to start expecting VIX to go higher just on timing. We need the price action to confirm. So at the bare minimum, if we see the VIX rise above the March 17th high, considering that the ES has key timing for March 19th, which I've been talking about in the skin and the mini for days, that would be a sign that the broad market is going to be pausing, topping out, and correcting lower as the VIX rises higher. Now, if that occurs, okay, so the first level to monitor, which I always mark resistance or upward moves in blue, is this guy right here, 2095. If that gets taken out to the upside, how far might we go? Well, the next parameter is here, 2493. And I didn't just pick that level randomly. It has significant meaning, part of my key approaches to finding support and resistance in markets, which I teach in the 4 Zones RSI coverage system. All right, that's what I'm preparing for. That's what I'm watching for in the VIX now. I like to watch the VIX when it's quiet and boring like this, because then you're getting ready for the big moves. Now, if it continues to move downward from current levels, hey, we already have the target. This price target, which is about 14, is still intact. Now, if that occurred, then you could expect a really strong move higher in the broad markets to go along with it. All right. So now you have everything to monitor on the VIX while it's at a key timing point, whether it actually moves towards the target or doesn't. You can be ready to boost your profits either way. Catch you on the inside. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.